Alright, so I'm going to demonstrate how I sell covered calls on shares that I own to generate additional income every month or 2 months, right? So I'm looking at Microsoft, and you can see that for Microsoft, I've entered the investment much earlier. So right now it's going up and I'm already in the money, as in I'm making some profits, and I can see a resistance that is happening at about 113. So right now it's about 111, and I'm going to hit resistance at 113. So I don't think that in the next 30 days or the next 50 days is going to go above that level, right? So I feel quite safe to sell a call at 115 call, right? So I'm going to show you how I analyze this and how I place a trade, and I'm going to place a trade on with another broker, Interactive Brokers, because I've got several accounts with different brokers. So it gives me an opportunity to show you how I enter my trade with different brokers as well, right? So I'm going to sell the 115 strike call for Microsoft. Okay, so first I'm going to show you how I analyze the trade, and I'm going to sell the April calls. Right, so these are the April calls, which expires on the 18th of April. So it's 55 days to expiration, right? So in 55 days, if Microsoft doesn't hit 115, the calls I sell expire worthless, and I keep all the premiums, which is the best case scenario, right? So 115 over here is the one. Let me just note it down. 115. So the calls are now selling at 168, 170. So ask 169, 167. Again, you can see it changes, right? The market price about 168. So for every one contract I sell, it's times 100. It's $168 of free money, which I get. Okay, so that's cool about selling covered calls. You're literally getting free money, and whether the stock price goes up or goes down, it doesn't matter because I make both ways. So I'm going to place my order using one of my brokers, which is Interactive Brokers. And this is my phone app, as you can see. All right, this is just one of my accounts. And let me show you the trade over here. Okay, where is it? Microsoft, right? So you can see that for Microsoft, I've got 100 shares for Microsoft, and so I'm going to sell one contract of calls to collect income on this. Okay, oops. Right, so first thing I'm going to do is I'm going to click on order wheel. All right, so again, I'm using the Interactive Brokers app. I find it easier to use the app. I find the app is a lot easier to use to input data. All right, so I'm going to click on Microsoft over here, and I'm going to choose options. Okay, so I'm going to choose the April expiry call, right? And strike would be 115. 115, right? So I will choose the 18th April. This is the monthly calls, right? So click on that. And they come with this order wheel, which I don't like. I'm going to close that. Okay, there we are. So this is the Microsoft April call, strike 115. So now it's at 168. I want to sell this call. So once I sell it, $168 will be credited into my account. Okay, so I'm going to click sell over here. Okay, so quantity sell one contract at 166. Now, right now it's 168, so I can put in whatever price I want. I could say, okay, let's go for 168 and see if it gets filled. I'm going to put good to cancel, and I'm going to slide it over here, and hopefully it's going to get filled. Right, so my order is in. Sell one contract of Microsoft 115 calls at 168. It's not filled yet, right? So I gotta wait to see whether it fills at this price, right? Right now you can see it's 167, 168, it keeps changing all the time. So if it goes down, I won't get filled, right? But if it goes up, I'll get filled. Okay. Although actually, I would like to get a higher price, but for the purpose of this demonstration, heck, I'll just sell it at 168. Again, the higher I sell it, the more money I make from these covered calls. So let's see if I get filled. Now, for those of you who think that $168 is really small money, is it worth my while? Well, think about it this way. So every month or so, I'm selling covered calls and collecting premium of $168, right? And if you take $168 and you multiply it by, say you do it for 10 months, right? So times 10, that's an additional $1,680 of income. Now, the Microsoft shares, you saw I've got 100 shares for every contract. So currently one share is $110. That's the market price of Microsoft. So times 100 shares, that's 11 grand. Correct? 11 grand. Now, usually when you own shares, how do you make money? You make money from capital gain. The shares increase in price. So Microsoft's capital gain is about 10% a year, right? So capital gain, which is right, capital gain is about 10% a year. And you have got dividends by holding the stock, right? So your dividend yield, which you get, it's not really high. I think the dividend yield is somewhere about maybe just 2% or less than 2%. So most investors just get capital gain and dividend yield. But when you sell covered calls at the same time against your stock, what happens is you get additional income. So 1680 divide by 11,000. Let me just do some math right now. 1680 divide by 11,000. That's 15%. So you've got extra income from your calls for 15%. Check that out. So if you add it together, it's roughly 27% return a year on your investment. All right. Now, and here's the great thing about it. In certain years, if the stock price goes sideways, you don't get any capital gain, right? The price doesn't go anywhere in certain years. Some years the stock goes sideways, right? And most people would just collect 2% dividend and say, well, hope for a better year, right? But by selling covered calls, even if the stock goes sideways, you still make your 15% plus 2%, that's 17%, right? Now think about it. If you're making 17% to 27% a year on a boring stock like Microsoft or Coca-Cola, and you compound that, that's tremendous returns for an investor. All right. So remember that, as Microsoft right now, it's $110. That's the market price right now. So what I'm doing is I'm selling a call with a strike price of 115. Now, when you sell a call, recall from my part one of the video, when you sell a call, you collect the premium, but you're obligated to sell the shares at 115 if it reaches 115. So after I sell the call, if the stock price does not go to 115, right, it remains sideways, it goes up a bit, goes down, what happens? That's right, I get to keep the premium for free, right? And I do that again every month. So that's a win scenario. Now, if the stock price does go up to 115 and above, what happens now? Now, by selling the call, I'm obligated to sell the shares at 115, which is okay because, it's at 110, I sell it at 115, I make $5. Plus, I make the call premium, right? The only trouble is that I'm forced to sell my shares at 115, so I've got no more shares left. So what do? Well, I can always use the cash which I got to buy the shares back and repeat the process. So can you see it's a win-win scenario? You can't lose on this strategy, provided you buy shares that you know will increase in value in the long run. And to do that, you have to use the formula which I use in value momentum investing, buying good companies at good discounts that have a sustainable competitive advantage. They will rise in value over time. Do not use this strategy for lousy companies that could go down and not come back up because they are lousy businesses. So fundamentals are key to selling covered calls. Now, while I'm waiting to get filled, let me just show you some of the other stuff which I do. I'm not filled yet. When it fills, I'll hear sound. And well, this is how I make some additional income using options. For example, let me just go down over here. All right. So you can see these are the Coca-Cola puts, right? It says Coca-Cola April 44 puts. And -3 means I sold 3 contracts of Coca-Cola puts. Let me just show it to you. This is known as a cash secured put. Okay, so you can see that I sold it at an average price of 57 cents. All right, so you can see that I sold it at an average price of 57 cents. Okay, so one contract times 100 is $57. $57 times 3 contracts is about $170. Okay, so in other words, I sold the Coca-Cola puts at 44 strike, and I collected about $170 in premium. Now, this is known as a cash secured put. Why did I do that? Let me just show you the chart. Okay, here we go. So if you look at the chart of Coca-Cola, this is the long-term chart of Coca-Cola, right? And Coca-Cola is a great company to own. It's one of the biggest shareholdings of Warren Buffett. So I always like to buy Coca-Cola shares. So I buy and I sell it and I make a lot of money. Now, what has happened is that you notice that like any stock, Coke goes through these ups and downs, right? It's in a range. Can you see that? It's in a range, right? So when it was up there at 51, I sold all my Coke shares. So now you can see it's coming down again, right? It's coming down again. And currently Coke's at about $45 over here, all right? $45.50, okay? Now, I don't want to buy it at $45.50, okay? I want to buy it cheaper. I'm a value investor, right? So I want to buy it at $44, or better still, $43, okay? So I was a bit impatient, so I said, okay, I want to buy it at $44. Now, I could wait for it to go to $44 and buy it, or I could put a limit order and hope that it goes to $44 and I get filled, right? But I didn't do that. So instead of doing that, what I did was I sold the Coca-Cola 44 put strikes. Okay, I sold the Coca-Cola, I repeat that again. I sold the Coca-Cola put at a 44 strike. So what does it mean? Remember that when you sell a put, you collect premium, right? So notice I collected the premium I showed you just now. I collect the premium, and by collecting the premium, I'm obligated to buy Coca-Cola shares at $44 if it reaches there. So if Coca-Cola shares drops to $44 or below, I'm obligated to buy at $44, which is what I want to do in the first place. Does it make sense? And the best thing is I get paid a premium for waiting for it to go to $44. Now, if Coca-Cola does not go to $44, it stays at 45, it goes to 50 or 60, what happens? That's right, I don't get to buy it, right? But I keep the premium for free, right? I get free money. And I keep repeating this process every single month. I collect premium, I keep collecting premium until it goes down to the strike price and I'm obligated to buy it. So by selling cash secured puts, we call this selling cash secured puts, I get paid to wait for the stock to come to me. And that's the great thing about combining options with value investing in your investment portfolio. There's ways to create extra income for yourself. All right, so having said that, let's go back to the trade which I put on, and let's see if I got filled. And you can see I have not gotten filled yet, right? It's now 165, 166, and I put my order to sell at 169. So, 168. Okay, so I'm not going to be desperate. Why be desperate? Let the price go to 168, and then I'll get it 168. All right. So I'm going to leave it there, and let's see what happens. And if it doesn't get filled, That's okay, it's fine, right? Because again, this is free money anyway. I already own the shares, and I'm just selling the calls to get extra income. And I'll just leave it there till it gets filled at 168 or higher. And that's how I sell covered calls as well as selling cash secured puts to generate extra income for my investment portfolio.